All right, so good afternoon, everybody, to our August LEPC meeting. We have an excited presentation today. We are very thankful that you were here joining us to hear about flood insurance. I want to say we do have a new technology in the room that we're all in right now. So as you can see, we got new TV monitors up on the screen. We got rid of the projector. And at each one of the tables, you'll see this box here. It's our microphone. The light is green right now, so she can hear you whoever is online. And it also is captioning our closed captioning as well. So people in the room can read what is being said. So if you do have a question, please make sure that you sit closely to the mic. That way they can hear you online, and we can also capture that on our closed captioning here as well. I don't think there's any other technology issues that we need to discuss here, so we'll go ahead and get started. I want to introduce our speaker today. We have Gail Moldovan, aka the Flood Queen, as an industry-leading flood insurance agent consultant with over 30 years of experience. While working in the insurance business, she became a valued and trusted resource as an educator for organizations such as the National Flood Services, H2O Partners, and FEMA's National Flood Insurance Program, where she is currently a contract trainer. Gail is often called upon by localities across the U.S. to help them navigate FEMA's flood map changes, providing education and mitigation solutions for their community members. She has helped many consumers and business professionals resolve complex flood issues, which resulted in her receiving FEMA's 2012 Agency of the Year Award. Gail has also co-authored the book entitled The Mispricing of Flood Insurance, which was a study produced by Wharton University's risk management team. Throughout all of her many accomplishments in her career, you can see that her greatest passion is and always has been helping people wade through the flood rules and regulations to find solutions through mitigation that not only protects their homes and lives, but also their pocketbooks. So for that, Jim, I'll turn it over to you for an in-depth conversation with Gail so she can do the presentation.
Awesome. Thank you, Daniel. And to recognize Councilwoman Angela McClellan to my right, who is also a flood queen here, who really lives in this flood space, and to also let her know that our microphone is on. So, so in an area called Tidewater, we always encourage folks to have flood insurance. Are we conflicting with someone else?
Somebody else thinks they're the flood queen too.
Exactly. So honestly, I just trying to learn more about what flood insurance is, how it does, or how it works, and quite frankly, from my perspective, you know, how folks are not benefited from it. At least a lot of folks who can't afford flood insurance. And then in researching, I've learned that I've not necessarily been telling folks accurate information about flood insurance. And I really got that understanding after talking with Gail. So just to backtrack a little bit, I bought a book by Carolyn Kowski called Understanding Disaster Insurance. So it really opened my eyes to this whole world that I didn't necessarily understand. And Gail's name came up, and the work that she had done in Portland, Oregon, and how she was able to make it more affordable for folks who were being overcharged. And I was just kind of inspired by her work, thinking of how something similar could be done here. And so I just thought, well, I mean, why not just contact her to see if she'd be willing to talk with us about her work, about her passion, and we can benefit from as much as we can from her knowledge. And she graciously said yes. And in the conversation that we had, that 30-minute conversation, I learned a great deal right then and there. So I'm really looking forward to her talking to the group today, those of us who are in person and the many of us who are online. And Gail, I'll turn it to you, but I just wanted to say thank you again for joining us this morning where you are, and being willing to talk with us about the intricacies of a very complex program. And we do have some heavy hitters here today who might come up with some really good questions and really pick your brain. So with that, real quick, Ms. McClellan, do you have anything that you'd like to say to kick it off?
No, Gail, thank you so much. This is a huge issue for our community. Flood insurances. I just finished drafting some possible legislation in terms of flood disclosure from landlords to renters. And one of the things another intricacy of flood insurance I didn't realize is that renters also need to carry flood insurance if they are to be covered. And I don't think that is a piece of the puzzle that we often talk about. But in a community like Norfolk, where we have so many renters, that is another piece of the puzzle that we need to be considering as well. So thank you so much. I just paid my flood insurance bill. I live in an X zone, and it went from $650 to $749, and it used to be $400. So, you know, risk rating 2.0 is crazy. And I guess we should also talk about the fact that Norfolk participates in the CRS program, and we currently are at a 25% discount rate from the work that we're doing there, and very proud of those efforts, and certainly something that we would love to get to the ultimate 45% discount. And then I also wanted to I don't know if we've gone around the room and done introductions, but sitting also, in addition to Jim Reddick, who is one of our amazing members of Team Norfolk, we've got lots here. Dr. Paul Robinson is sitting with me, who runs as executive director of RISE Resilience Solutions Lab. What are we calling it now? Innovations. And this is a really unique organization that was funded through HUD money from Sandy's National Disaster Resilience Competition. Yeah. And they do challenge grants for entrepreneurs in the resilience space, and their third round they just completed was specifically focused on flood insurance. So he's here, and he'll also be interested in what you have to say and possibly have some good questions and comments. Thank you, Jim.
Thank you, ma'am. Gail, with that, without further ado, we'll go ahead and turn it over to your presentation. You've got a lot of folks interested, and so looking forward to your presentation. Thanks, Gail.
Yeah, perfect. Thank you. Good morning. Well, it's good morning in Oregon. I guess it's good afternoon there. I gotta say, the one thing I love about technology is that we can have these kind of meetings, you know, all the way across the United States. And I think that is just amazing. I really appreciate you guys having me here today, and hopefully I'll answer some of those questions. And the presentation that I'm going to show you today is really what I put together for real estate agents, and kind of talking what you were talking about, disclosure with landlords. And so many real estate agents will sell a piece of property and not tell the owner they're in a flood zone. And then the buyer finds out when they go to title, and all of a sudden they have to have flood insurance. And then I'm telling them they're paying $2,000 more money a year, and, you know, everybody falls apart. So, you know, we try to get people to be proactive so that we don't have to have reactive issues with homes that are being sold, or, as you said, when people are renting an apartment, you know, that they should know that they need their contents coverage for flood. And a lot of people assume that if you have a homeowner's policy or a renter's policy, it covers flood. And that is a huge misconception. And so unfortunately, they find out when they have that loss that there's no coverage. So we'll have some questions at the end, but I'm going to go ahead and start my PowerPoint here. So the PowerPoint does go over some really basic information. Some of it you guys may know already, and some of it may be new to some of you, but I always think it's really good just to go back to the beginning and to just kind of talk about those basic coverages and the program itself. So just so you know, this is, my legal disclaimer, because these days you have to have them, right? Flood insurance regulations continue to change at a very, very rapid pace. Therefore, the information provided today is for educational purposes. It's not to be used for legal advice. And I can't always guarantee it's 100% updated. I do try to stay up on all the rules and regulations, but they do change quite rapidly. So let's talk about the beginning. How did it all start? When did flood insurance become a thing? Well, basically what happened was Congress had passed what they call the National Flood Insurance Act in 1968. This was a response to the burdens that were put on the disaster relief program to help people who were flooded. So Congress came in and said, okay, well, we need to start looking and start identifying flood prone areas, and we need to start mandating that people purchase flood insurance. So back in 1968, you would actually buy a flood policy from a federal employee. And it wasn't until 1973 that they started mandating flood insurance be provided or required by lenders. So anybody who was taking out a loan that's federally backed, the lender would have to run the flood zone determination, determine if they're in the flood zone, and require flood insurance. Now, I can tell you the lenders and banks did not enter this agreement all excited. They kind of entered scratching and kicking their way through it, not wanting to be the one responsible for this. And lenders to this day are held highly responsible, even so much to the fact that if they give a loan to somebody who's in a high-risk flood zone and they did not require them to purchase flood insurance on that loan to cover that, they can be fined up to $10,000. So lenders are very, very particular. They have 45 days if a policy cancels, and then they're required by law to force place. A lot of times the consumer gets mad at their bank or the lender, the mortgage broker, and it's really not their fault. They're just following the rules just like everybody else. And for those of you that have been around for a long time, you know that we've had a lot of reform acts, right? There was the Bigot Waters Reform Act, then there was the Grimwater Reform Act. And so, they keep changing and trying to find that sweet spot, like for what are flood insurance rates, something people can afford, as well as, something that makes the program not be so much into debt. I haven't checked the debt ratio recently, but I know it was quite high before last time I checked it. But I think the biggest reform they've done now is the risk rate 2.0. So it's the first time in 50 years they significantly affects the way flood insurance risk is determined and how it's technically rated. And regarding the preferred policy you were talking about earlier, those eventually are going to go away. And that's why you see those rate increases. And what people don't understand on their deck pages or the renewals they get in, there's actually another line that says what your rate's going to go to. And sometimes we've had people who are like, their rate maybe went up the maximum 18% this year. And they're, maybe it said they're paying $2,000 now. But if you look on their flood policy, it says their max rate's going to hit $3,700. So sometimes this is about education. It is an insurance agent's responsibility, in my opinion, to educate their clients, to let them know that these are the rates and this is where they're going to go because they are printed. But let's face it, insurance documents are not very fun to read. Who really takes the time to read every single line? So let's kind of back up a little bit and talk about what is flood. I live out here on the coast, so I have a ton of people always calling and saying, oh, does flood insurance cover tsunami? Yes, flood insurance does cover tsunami. And based on the federal program, so this is directly out of the FEMA flood manual, flood insurance is considered, or a flood is considered a temporary condition of partial or completed inundation, such as overflow of inland or tidal waters, unusual and rapid accumulation of runoff or surface water from any source. So I preface this to any source, and in my picture, you probably can't really tell, but that's a fire hydrant going off, right? So basically, even if you had a fire hydrant in front of your house and it flooded your property and the street, because it has to be more than one property, so we have to have two properties, and it's accidental, it's not unplanned, and it's sudden, your flood policy would respond to that coverage. At one time, people might remember they used to say it used to have to cover so many acres, and that has changed over the years. Now it just has to affect more than two properties, and should also be water from an outside source. So we explain to people, it's not going to be your dishwasher overflowing. It's not your hot water tank that exploded. It's nothing from the inside. It's water from the outside that affects the inside.
Hey, Gail, there's a point that you made, a really good point when we talked the other day about more than one property. Because when I'm thinking more than one property, I'm thinking more than one house, right? But you made a point that the roadway is property that is owned by the city, and that counts as that second property. Is that accurate?
Yeah, that's correct. So it is property either owned by a single individual or an entity ownership. So like the city street would also be considered to be a property. You can actually have at least 2 or more acres or 2 or more adjacent properties, but there has to be at least one other that has to be affected.
Thank you, ma'am.
So another thing that's covered under flood insurance is mud flow. And this is covered by the NFIP policy. And there's a little bit of confusion about it because, like, what is the definition of mud flow? And you can kind of see in my picture that the definition is defined as a river of liquid and flowing mud on the surface of normal dry land where earth is carried by a current of water. Other than earth movement, such as a landslide, slope failure, or saturated soil, moving by liquidity down the slope are not mud flow. So you can kind of see in my picture there the difference. The top one, really definitely is that of a landslide, even though it's mostly mud. On the other, you can see that the mud is being carried by the water down the street. So I always kind of tell people, if it looks like chocolate cake, it's not covered. If it looks like a milkshake, you got coverage. Flood erosion is another big thing that is covered under the flood policy. Now, this can't be erosion that's happened over a period of time. It has to be caused by the current levels of water. And I think we've all seen them when they're, flooding, where they're just going down the middle of the street and they're taking everything with them and they're taking houses and that sort of thing. So erosion would be covered. But of course, like in both of these cases, they're probably going to have flood damage. I think that one house is going to fall in the river, but there would be coverage for that if it touches the property. If the erosion is caused by the property damage is there, we don't cover. There's no coverage for streets or anything for your trees. So now when we talk about an insurable building, what's insurable? So basically, under the building definition, under the flood insurance program, a building must consist of 2 walls and a roof to be eligible for flood insurance. Now, in my area, there's a lot of farms out here. So we do have clients that get a little frustrated when they refinance their farm and they find out that it's in a flood zone and we have to insure their hay building. And they're like, well, water's just going to keep flowing. Like, why do I have to insure that? But unfortunately, the lender has to require it if it's 2 walls and a roof. You can also get coverage on course of construction. They are eligible, but the deductible is double until it's walled and roof. So sometimes when people are taking out a loan for new building, we have to write flood insurance on them. And I had one recently that I felt really bad for the contractor because he was building 7 duplexes, all in the flood zone. So before his loan could fund, he had to take out flood insurance, and the premium wasn't cheap. I think for all 7 of them, it was about $60,000. And so he had to pay for the flood insurance before they could fund his loan. But then what happened was, once he got to cities and permits and all those other things, he didn't start building for 8 months later. So it was really unfortunate that he had to pay for flood insurance when there was nothing there yet. But it was a requirement. So sometimes the rules just don't really fit everybody. And in this case, that was one of them. Mobile homes are insurable, but they have to be anchored to resist flotation. So the wheels have to be removed and they have to be anchored in some way to resist the flotation. Under the NFIP program, you can only have 1 building per policy. So, on a homeowner's policy or a commercial policy, you may have multiple structures insured under 1 policy number, and that's not the case with the NFIP program. They require every building to be on its own policy. The private insurance companies don't always do that. We can put multiple buildings on 1 policy, which saves the client policy fees, because sometimes the policy fees can be $200 or $300. And so if you have to have a building, every building, so let's say you have a house, and then behind your house, you have a storage shed, and they're both in the flood zone, you have to take separate policies out on each of them and pay double policy fees, 1 for the house and 1 for the shed. And then, of course, when you look at people who have farms, if we're not able to qualify them for private insurance, we could have people that may have 5 or 6 buildings. You know, they may have a hay storage, a silo, a barn, a feeding barn in the house. And so each one of those are covered and they all have federal policy fees. So it can get very, very expensive. Under the current flood program, the available coverage is $250,000 for residential dwellings and $100,000 contents, and non-residential buildings is $500,000 and $500,000. Now, we've all seen floods, and we all know what's going with houses and the cost of material and the cost to replace everything. And I can tell you $250,000 is not enough to put somebody whole again. It's basically a Band-Aid. People can buy excess flood insurance. Sometimes agents aren't educating their clients that that's an option, or sometimes clients are like, oh, it's never going to happen to me, so I'm not going to buy excess flood. But at $250,000, you're going to have a mortgage probably and not a house, right? I had really hoped that when they did the risk rate 2.0, this was one of the things that they would change. I know I've voiced my opinion, and many people have either, that they need to raise the available coverage. The advantage of private flood insurance is that we can get higher coverages. And so sometimes that is a better route for clients to go, premium-wise and coverage-wise, because they can get the coverage that they really, really need.
Ask a question.
Yes, we got a question inside the room here.
You were talking about $250,000 to cover a private dwelling. A lot of your dwellings cost more than $250,000 just to buy them. So that's not really going to cover a whole lot. So that's one point. But does your regular homeowners insurance cover anything, even if it was from a flood, if you do have flood insurance?
No, your homeowner's insurance policy excludes anything flood related. And I can tell you like an example of what happened with Katrina. And this is just because I knew some of this, was that when, you know, that was both wind driven and flood driven, but the flood insurance policies would only cover the building up to the watermark. So like if the roof blew off or there was damage to the roof, then the homeowner's policy had to pay for that damage. So it became a little complicated when you combine both those things together, flooding and wind. But yeah, homeowners insurance will not cover anything to do with flood. So, yeah, no contents coverage, no building coverage.
So Gail, I have a question. So the private insurance market just got into this a couple of years ago, if I recall correctly.
Correct.
And they've come in with pretty, significantly lower rates, but there is a concern about whether or not, I don't want to say legitimacy, but whether or not they're funded in a way where, yeah, they're Lloyd's of London backed, but if we have a major storm, are they really going to be able to pay out the claims? Are you seeing anything related to that, or have any thoughts about going with, NFIP insurance versus a private backed insurance policy?
So I can tell you, right now the insurance world as a whole is just kind of turning upside down. Not so much on the flood side, but if you notice, State Farm, Allstate, and many other carriers are pulling out of states. They're not writing there. They're not writing homeowners or auto insurance. So we're seeing a lot of that going on. But at this point, I haven't seen any struggles on the private flood side for flood insurance. Lloyd's of London, they are the first insurance company of the world, and there is a lot of money to back that up. Now, there are several private flood carriers. I personally, both of the private carriers I write with are backed up by Lloyd's of London. But you're right, it is a risk. If somebody takes out a private flood policy and they go belly up, because they can't afford to, pay for all the floods, your state policy does not, because the state of, like our state, every state will step in if an insurance company goes insolvent, right? But it would have to be like, it can't be a private carrier. So it has to be an admitted carrier, and these private flood insurance carriers are not admitted. But so far, we haven't seen any issues with it.
Wasn't that the case with Florida this past year? They're having to back up some of the flood policies. They're going to be on the hook for some significant dollars. The
And
state,
then that, you said that's the state of Florida.
yeah.
Yeah, I hadn't actually read that, but I know in Florida, one of the biggest writers there is Wrights Insurance for flood insurance. So I'll have to look into that and Google that and see, you know, who that is that pulled out. It would be interesting to know who wasn't able to make and pay their claims.
Okay, sorry. Thanks, Gail.
Yeah,
Yeah,
you're good.
One more question to piggyback on
Sure.
what Cheryl was saying a couple minutes ago. So if a roof is blown off and rain is infiltrating a residential property, that's not flooding. That's
No.
something else.
Right, that's under your homeowner's policy. Yeah,
Got it.
that's
Okay.
wind. Yeah,
And Gail, I got a question.
sure.
If you get a private insurance policy, that would pay out, oh, I got this one here. That would pay out after NFIP has paid out 250, that the private policy would kick in any excess above that.
No, so there's two different things that come into play here. You can have the first 250,000 can either be a federal policy or private policy, or on private you can buy higher coverage. So you could buy coverage for 450,000 under private coverage. Excess coverage is a separate policy altogether. So even on a federal policy, there are companies that offer excess. So basically, it's an insurance policy. Let's say it's for 500,000, and your deductible is set at 250,000 because the primary, the NFIP, would pay first. So there is a different. So private insurance isn't intended to be excess. It's intended to be primary, but there are excess flood policies available.
Thank you.
No problem. All right, so we'll go ahead and move on and talk about like when is flood insurance required? You know, so as I mentioned earlier, anytime somebody takes out a loan that is backed by the FDIC, the mortgage has to require, the lender has to require that they purchase flood insurance. And if they're in a high-risk flood zone. Now, if somebody takes out a loan from a private carrier, you know, like a personal loan, or the landlord carries the loan, they don't have to require that person to purchase flood insurance. They can, but they don't have to. There's no rules or regulations to say they have to do that. If your house is paid for, you don't have to carry flood insurance. That's your choice to do so. So again, there's nobody's fleecing that to see if you're going to continue your flood insurance. And we do have people often that will pay off their loans, and the first thing they do is cancel my flood insurance. Of course, you know, on the West Coast, we don't see as much flooding, so it's not as real to them as it would be to people on the East Coast. So flood insurance rate maps. So flood insurance rate maps are used by multiple people. You know, as an insurance agent, the first thing I do when somebody calls me and says, I need to know if I need flood insurance, I go to the federal rate maps. I've educated real estate agents to also do the same thing, to go online, look and see if it's in a flood zone. And to be also, when you sell a house that's in a flood zone, you can get a flood insurance rate before you even sell that house or put it on the market, because flood insurance is one of the insurance policies that has nothing to do with the person buying it or living in it. It's all about the house. It's all about where it's located. It's all about its foundation. And so, unlike your auto policy, they want your date of birth, sometimes your social security number, you know, and so it's all about what's your credit history look like, you know, and on your home too, what's your credit look like. And it takes all these criteria that are personally have to do with you. But flood insurance is not that way, which is why on the NFIP flood policy, it's the only policy that exists that you can transfer from one owner to another. And I highly encourage people to do this if they're buying a piece of property and it's in a high-risk flood zone and there's already an existing federal flood policy. If they've looked at other avenues like private and they haven't found a better deal, sometimes the best thing to do is to transfer that flood policy from owner to owner. Because if they were at one time grandfathered in, or if at one time there was some credits giving to that property, that flood insurance stays continual. And so then you get that advantage. So like right now, if you sold a piece of property, and let's say you're just paying $700 for your flood premiums, right? But you decide you're going to sell it. Well, when you sell it, if somebody comes to me and they need to get insurance on it, I have to rate them under risk rate 2.0, and the rates may not be the same. So they may be having to pay $1,300. Where if you transfer your policy to the new owner, they can maintain that lower rate until that rate goes up. So that is really, really a huge thing. And I don't know that a lot of real estate agents understand that or know that that's an option, or a lot of consumers know or understand that either. So we always recommend that, find out about the current flood policy, see if it can be transferred, compare it to what, you have or get a quote on, just to be safe. So again, lenders will use federal flood maps. Obviously, building officials use it. Consumers use it when they're purchasing new locations. But the one thing to remember, regardless of how hard the Corps of Engineers works, no matter how hard they work to make these maps and to identify high-risk flood zones, at the end of the day, water has no boundaries, right? It's not going to get to that blue line and go, oh, I can't pass this into that yellow line. Now I have, I can only go this far. So I always tell people, these are only tools. If you feel like there's a risk, it's better to take out flood insurance than to take the chance. We'll talk a little bit about the flood reform risk rate 2.0 changes. So what you're going to see eventually go away are all the flood zones. So they're no longer going to refer to flood zones as A, E, X, or C. Those will eventually go away, and they will only be used by lenders to kind of determine if a person's in a high-risk flood zone, but you'll start seeing them disappear on flood insurance deck pages. As you know, kind of like they originally said, you used to have the 100-year flood zone, and now they say it's a 1% chance. So they've changed some terminology there. So if you even have a 1% chance of flooding, the lender has to require mandated flood insurance. One of the biggest things and biggest impacts was elevation certificates are no longer required, but optional. This was a really hard thing because elevation certificates were our map to mitigation, right? We could look at the elevation certificate and tell that maybe they weren't properly vented, because it documents venting information. Or maybe the heat pump outside the house wasn't sitting 1 foot above base flood elevation. So we had a lot of mitigation options that they kind of did away with, which is really unfortunate, because now those things don't seem to matter. And even though they've said elevation certificates are optional, and I have submitted them, the systems aren't set up to rate or give credits for elevation certificates. And I've never had one yet come back and say, oh, we reviewed the elevation certificate and we're going to lower the rate. So I'm not really sure what they're doing on that side of everything on the NFIP side, but I haven't seen it to be helpful. One of the biggest mitigation things that we used to do, which I still believe is important, is that was flood vents. So the purpose of flood vents is to equalize water pressure, to make sure that when the water comes to your house, it's not going to knock your foundation over, right? And that the water can easily flow underneath the house and keep going, much like it would a dock. And so they did away with flood venting, basically in the sense of giving a big credit for it. We could sometimes take people's homes, properly vent them, equalize that water pressure, and it would save them like $1,000 off their flood premiums. Now the new risk rate 2.0 only gives them a 5% discount for being properly vented, which doesn't make it cost effective to properly vent your home, which is unfortunate. So I was really disappointed to see that happen, because I think that's really important for saving homes, that they are properly vented. And the proper ventilation for a home should be 1 square inch of venting per every square foot of the foundation. So the interior foundation crawl space, 1 square inch of venting per every square foot to properly equalize the water pressure as it comes barreling down on your house. Standard flood zones are going to be replaced with information specific to a location. So now the rates are based on flooding source. Is it the river? Is it the ocean? Is it urban flooding? Is it storm surge? And how far you are, your distance to that water. Although I can tell you, I've seen some that make no sense to me, where I've had some policies out, on the ocean, and they're really close, and then their rates are like $600, and someone inland's paying $1,200. So I do believe that there's still some issues with the rates. Ground elevation is something taken into consideration, where before we would read those elevation certificates, right? And we would say, oh, well, the base flood elevation is this, and the lowest adjacent ground is at this elevation. And so, we know what to expect if there's going to be a flood and how much water this house is going to take. And that is still good information. I still believe elevation certificates are good tools for sure, but they're not using them for rating anymore. My understanding is they're reading the ground elevation by LiDAR. So when we put in an address, it just automatically brings back numbers that are like 12 digits long. Don't make any sense to me, but and that's how they're rating flood policies. They do take into account flood frequencies now, where before claims were considered, but it is much more detailed now. And policies that are severe repetitive loss policies can't be quoted by an agent. We quote them, but then we have to submit them for rates. So yes, we fill out the paperwork, but we don't get the rates. NFIP does the rates. The frustrating thing about claims is that I can run a report on your home, and it will tell me any claim that's been reported to any insurance company in the last 10 years. When I run a flood quote, I can't get access to prior claims. They consider that information private. And I guess there are some loops and things you can go through that takes, 5 or 6 weeks to get it back. But that makes it very difficult to be able to tell people if you don't know for sure that there had been a claim at that property.
Hey, Gail.
Yeah.
In Virginia, we passed legislation a year or so ago. I think it went into effect this past January, that requires flood claim disclosure.
Nice.
It's not perfect. It requires disclosure from the seller for that very reason, to a prospective buyer if there are 2 or more claims of $1,000 in a 10-year period. We fought the realtors lobby for years until I finally sat down with the head of the Realtors Association, who just assumed, because we're a buyer beware state, that anybody would have access to the claims. And they finally proved that no, only the seller. So we do have that piece, but that just went into effect. We're hoping and lobbying at the federal level that NFIP bill would do this on a federal basis nationally.
And that would have been really, really nice, and I think that's great disclosure to have there. It's kind of like in Oregon too, and we'll talk a little bit more about the mispricing of flood insurance that I did for the city of Portland. Was, we discovered that 30% of the flood policies were rated incorrectly. People were paying more. Some people maybe less, but most of them were paying more. And it kind of came back to that same thing of like, what did the insurance agents know? As an insurance agent, you get your license and you take a flood insurance class. I've been licensed for 34 years. How many changes has the NFIP made in 34 years, right? Like a lot, like it's crazy. So I'm required to do continuing education, but that education didn't have to include flood insurance. So we had a lot of agents out there still writing flood insurance that didn't know what in the heck they're doing and making mistakes on the applications, because the computer will give you a rate for what you tell it, but if you don't tell it the right thing. So now in the state of Oregon, we kind of lobbied and did the same thing. And now if somebody sells flood insurance in Oregon as an insurance agent, you're required to do mandatory flood education every time your insurance comes up for renewal. So when our licenses come up for renewal, we have to do mandatory flood education. So I think more of these things and requiring disclosure is great. The real estate agents around here don't have to require that, or not required to do that, but I try to do a lot of classes and educate them. And we talk about ethics, what is ethical to do, right? And so, some of them have been really good about letting buyers know or getting quotes on a property that's for sale ahead of time. So they've fully disclosed like, hey, this is what you're looking at buying this house for. Beside your homeowner's insurance, you're going to put an extra $1,000 out for flood. I think that's great. One of the other things that FEMA took into account when they figure out your flood rates is the cost to rebuild and the replacement cost value of your home. To me personally, this literally makes no sense, because why should they charge more for your home for your flood rates? Let's say your home value is 400,000 and I can only write a max of 250, but they're going to charge you more premium because you have a higher valued home, but you're still only going to get 250,000 in coverage. When I put in the rating system that your home's worth $250,000 and you buy $250,000 worth of coverage, all of a sudden your rate's less. That literally just does not make any sense to me. So, because you're still not getting any more coverage, you're still getting 250, right? So, yeah, some of these things. So preferred risk rate policies, as you were talking about, are no longer going to be available under risk rate 2.0. They're phasing those out. So that's why you're seeing the rate increases. And I would be really interested, if you wouldn't mind, I'd be happy to share my email with you. I'd love to look at your deck page and see if it shows what your rate's going to go to. And so you can kind of get an idea what that means when that risk rate, when that phases out for your preferred policy. Renewal and payments, grace period was extended to 90 days. Now there's no grace period. So it used to be if a lender, which it happens, they pay lots of people's flood policies, right? I mean, thousands upon thousands. Every once in a while, a lender didn't make the payment on time. And they always had like a 30-day for the consumer and up to 90 days to at least have your policy reinstated with a lapse in coverage, which kind of grandfathered your current rates. Well, right now, there's no grace period. If somebody misses making their payment and the policy cancels by 1 day, they're out of the program and they are moving into full risk rates at 2.0. So that's been a little hard. And there's no exception for lenders, where in the past there had been exceptions. Claims are now surcharged. You were talking about the 10 years. Under risk rate 2.0, claims are now surcharged back 20 years, regardless of the owner of the property. To me, that's insane. But that's what they did. I thought 10 years was a lot, but now for them to take a history for 20 years and to make your rates on that property be the higher rates based on claims for 20 years is really hurting those properties that have had claims.
Hey, Gail, real quickly, I'm sorry. What does that mean to be surcharged back 20 years?
Yeah, so it's kind of like, let's take into account, like if you have a homeowner's policy and you don't have any claims and you get your deck page and it says you have your claims free discount, right? So on the FEMA side too, although they don't print that on the paperwork, there are rates based on whether you've had 1 claim, 2 claims, or 3 claims. And so your rates are adjusted based on the claims on your property. And like you said, it used to be 2 or more claims over $1,000 in 10 years. Now it's 2 or more claims over $1,000 in the last 20 years. So you're going to go longer before you get back to kind of like normal rates. You're still going to have a surcharge for having claims.
Okay, thank you.
I have a question.
Yeah.
I'm sure. The rates through the federal flood program and private insurance, is it the same?
No,
What,
not.
why is it different?
Well, of course, the NFIP rates are all set by Congress, right? Like they make the decision on what those rates are going to look like. And on the private side, they're not subject to the same rules and regulations. They can adjust, like some of FEMA's flood policies have a $250 policy fee. A private flood company only charges $50. So that's why, and that they take risk differently and how they rate it. And usually on the most part, not always. I mean, sometimes private flood can be higher, but on the most part, private flood insurance is lower. But again, private flood doesn't take people once they've started having claims, right? So their risk is a lot less, right? Where FEMA is still writing the people that have the claims, they're just going to charge them more.
Gail, this is Jim. This is probably a dumb question, but I know a flood insurance policy takes 30 days to go into effect. Is that the same on the private insurance side, or is that just a FEMA regulation?
Yeah, so the only time it takes 30 days to go into effect is if you voluntarily purchase it, right? So if you're closing on a loan, the 30 days is waived. You get coverage the day of the loan. And so I don't know, I can't remember what state it was, and it was a long time ago, but there was a dike that was going to break and it was going to flood this whole entire area, and people wanted to go get flood insurance, but there was a 30-day wait, and they're like, oh, that thing is going to break, and before the 30 days is up. So people were going to their mortgage brokers to take out a loan so it would waive the 30 days. So it got a little crazy, and then it was like, oh, well, that's interesting. On the private side, the companies I write with, I have one company that has no waiting period, and I have one company that has a 15-day waiting period if you're purchasing it voluntarily. Again, if you're closing on a loan, we can make coverage effective the day your loan closes.
Thank you.
Yeah, no problem. So under the risk rate 2.0 premium changes, this is according to FEMA. They said premium reductions was approximately 23% of policies. The increase would be 66%. Some would see low as $10 a month to 11% higher than $10. So pretty much what they're saying is that there's only going to be 66% of the people that are going to see a $10 a month rate increase, which is really what, $120 a year. And 11% are going to see more than that. And then the max rate increase is 18%, which is going to fall into the rest of the percent. I don't know that I personally see this to be accurate for what I see, but again, I'm only looking at my policies that we have, right? But it does seem like I've seen a few policies that have gone down, but I mostly have seen policies that have gone up.
Yeah. Gail, another question. So you mentioned, and I didn't notice this, when policy renewals are going out, there will be a risk rate 2.0 final number to which they're moving towards, recognizing the 18% limit
Yes.
increase. Is that something that as a homeowner or could I contact FEMA and get my risk rating 2.0 final number?
It should be on your deck page. Yeah, it should be there. You probably just never really noticed it, but it would technically really be there. That's why I was like, if you wanted to email it to me, I could show you where it's at. And I didn't think about it, but I probably could have pulled up one of my clients and taken out their name and address and showing you the point where what it looks like. I'm gonna log in here really quick and see if I can find one.
Will FEMA disclose that?
Yeah, it says full risk rate. Let me look here. I'm gonna look one here, renewals.
I asked the question because I'm wondering if the disclosure requirement should not only be the previous flood claims, but also the risk rate 2.0 full fair. Do you understand?
I do, but I don't know. I mean, the only person that's going to know what that rate's going to look like, well, I guess if the deck page is there, right? But again, I think if people have a flood policy, they should transfer it to the new owners if they're selling the property. So I'm going to look here really quick and see if I can get a screenshot of where it's at. Sorry, I have a couple policies here to look at. So hopefully I can show you an example.
That's okay. That's okay. I think this is a piece of the puzzle. I had no idea that I knew it increased, but I didn't know that there's actually a number to which it goes up to.
Yeah, I'd be happy to provide you with some examples on that. And again, like I said, if you want to send me a copy of your deck page, I can show you where it's at on your deck page. Because it's my understanding they're required to print it now. In the beginning, doing at the risk rate 2.0, I think that a lot of people, the companies and the write your own companies didn't know what they were doing. So it didn't happen. Because keep in mind that there's a couple different programs, right? Everything goes back to the NFIP. But you can get flood insurance NFIP direct. It's going to be the same premium. You can call State Farm and get an NFIP policy, and it says State Farm on the deck page, but it's an NFIP policy. The rate should be the same. The rates are always the same, whether you go to State Farm, Allstate, me, or anywhere, if it's a federal flood policy. It doesn't differ at all. It's all based on that property address. So, you know, from that part of it, since it all goes back there, all of those deck pages are supposed to now show what that full risk is going to go up to.
So as an insurer, if a client comes to you and says, I want to buy a property at 531 Warren Crescent, you can say, this would be in your insurance rate. Could you also then provide them what that risk rate 2.0 is going to be?
So if it's
At
a
the
new
same
property, right? So here's the deal. If they're buying a new property and there's not an existing flood policy, they're starting at the full risk rate of 2.0. So the only ones that are seeing are the ones that are existing, right? So if they're a new client and they come in, they automatically start at the higher rate. If their policy canceled, they automatically go to full risk rates. But it's the people like yourself that have had policies in force and you have had them for a while, that there's a mandatory max increase of 18% that they can put on your policy. So your policy goes up every year, but it actually prints on the deck page what the full risk rate is.
Okay, thank you. I
Yeah.
forgot it. Yeah, that's a good point.
No problem. So I was kind of Googling yesterday to see how many private flood insurance carriers are out there. Right now, I was able to come up with 41 private flood insurance carriers. Not all of them are backed by Lloyd's of London, but a majority of them are. Generally, on private flood insurance, the rates are lower and higher coverages are available. And that's kind of one of the reasons why sometimes I will do a private flood policy. I do both. I do double work. So I probably work really hard for my clients. Like, I just have to know what the federal rate looks like and a private rate, right? So if somebody's calling me, I'm going to go into 2 different programs and I'm going to rate this twice, because that's just who I am. So
Hey, Gail, we have another question in the, go ahead, Cheryl.
Can me as a private individual go out to rate risk 2.0 and check it out myself? Or can it only be done by an agent?
Yeah, because you can't. The FEMA used to print all the rates in the flood manual, which would probably take you, 3 days to figure out. But no, and the problem and the disconnect on this too is even FEMA employees don't even have access to these rating programs that are provided to insurance agents, which I find very weird, because I talk to FEMA region up here sometimes and they're like, they don't have the same programs to get to the same rates. So it's kind of a bit of a disconnect in my mind. I feel like they should have access to run some scenario rates and see what it really looks like, because it's faster than, trying to spend 3 days going through the flood manual.
Thank you.
Well, I think about private flood insurance, again, the higher coverages are available. And what I like about one of the companies I write with is they don't exclude basements. So what you may know or not know is that FEMA will only cover things that service the building if it's below grade. So electrical junctions and so forth. But if people actually have contents in their basement, there's no coverage for it. Under the private carrier that I write with, we can provide basement coverage. So that's really huge for somebody to be able to get that coverage. They are more picky about accepting flood losses. It depends, how long the loss was, what it was, and each of them have their own underwriting criteria in that. And most of them don't write manufactured homes. And I have not found one yet. If I could, I would be happy, because FEMA's risk rate 2.0 rates on manufactured homes are horrendous. They're horrible. So, and I've been working with my region out here. They know that. I send them the quotes when I do them, because people who buy manufactured homes generally are of a senior population, or lower income, because they're affordable. But yet when I have to tell them the flood insurance is $3,000 a year, all of a sudden it becomes not affordable. So again, we talked about excess flood insurance being available for higher valued homes. And then making sure federal flood policy is rated correctly. And there's no simple answer to that. Like, how do you know if your insurance agent rated your insurance policy correct? It's almost impossible for a consumer to know that. What we saw a lot when we did the program up here was that a lot of agents would rate a home based on being slab on grade. And my theory for reason for that was that when you're putting information in the computer, if you say the house is slab on grade, it just takes you to the next section. Once you put in it's on a crawl space, it brings up drop downs for more questions. How big is the crawl space? Are there any vents in that crawl space? What size are those vents in that crawl space? How many square inches of venting's in that crawl space? And I think that is complicated for agents. And so they'd just be, oh, it's slab on grade. But you get a better rate if your house is elevated than if it's on slab on grade. So that was one of the biggest things that we saw, when we were looking at rates.
Gail, do you get a better rating if you have a basement?
No, basement rates are very high.
Well, in a city, I don't know what Portland, but in a city like Norfolk, we have a lot of basements because we have a lot of very old houses.
Yeah.
So just how that, so basement actually increases. Okay, thank you.
Yes, basement rates are very high and coverages is very limited. And that's why if you have those older homes that have basements, they should really look at private flood insurance because they'll have coverage for contents and items in that basement. But on the federal side, yeah, basements are terrible.
Should never do with us.
So that's kind of just the kind of basics there. I wanted to, leave this open so we know we answered some questions so that we can actually, go into more questions if you guys have them.
Get the slides.
Oh, yeah, absolutely. The question was if we could share the slides, and we have those, right?
Yes,
I don't think-
that would be posted on our minutes and notes
Yep.
on our website, and so will the video link. So that'll be
Yeah,
up
so
later.
if you post the whole PowerPoint, let me resend it to you, because like I said, the PowerPoint that I gave you is one that I do like an hour plus class on. So I kind of picked out some key information.
Yes, ma'am. I'll wait till you resend the ones you want me to post. Thank
Yeah,
you.
that would be good, because it'd be confusing. They'll be like, hey, I didn't see that slide. She didn't share that slide.
So Gail, what are the disclosure laws in Oregon for sales and or landlords? Are there any?
No, there isn't any laws. I mean, they have to disclose if there's been a fire claim, but not a flood claim.
So you mentioned severe repetitive loss, and that was our argument to get the realtors to, say, yes, we should disclose that because of the big jump. Does that category go away in risk rating 2.0, or what does that look like?
No, severe repetitive loss category actually ended up going into its own little pocket. So like I had a home out here that we wrote. I didn't know it fell under the severe repetitive loss because we didn't have the claims history. So I wrote them a flood policy, right? And then now under risk rate 2.0, they're kind of connecting all these dots together. And then the client and myself got a letter at renewal the next year saying, this falls under severe repetitive loss. We need new applications, and FEMA's or NFIP will rate it directly. So then they're doing the rates themselves on that end. And her rate did go up about $1,000.
And are the category severe repetitive loss, the reason to go to severe repetitive loss the same in terms of what is it? Is it 4?
Yeah, so it originally was that 2 or more claims of $1,000 in 10 years. That's what they consider severe repetitive loss, but they are going back now for 20 years. So now they haven't been really clear. I don't know if that means if you've had 2 claims in 20 years, that makes you severe repetitive, which to me, that's a long period of time, 20 years.
Gail, monopolize here. Gail, a question about rainfall, because you showed the flooding pictures, and especially in the city of cars, when you get very heavy rain, you can flood outside of the expected floodplain, river flooding. For heavy rainfall and causing a flood, does NFIP cover that, or
Yes.
how is that going to be handled? Because we saw in Vermont homes that were nowhere near the ocean were getting flooded due to the heavy rains. How's
Yeah,
that
so if a person has a flood policy, but sometimes a lot of people who don't feel like they're at risk or next to the ocean or next to a river don't buy flood insurance. But if they had a flood policy and there was heavy rains and it caused, flooding in their area and to their property, the NFIP policy would respond.
So is there any push to inform the public that even though they may not be in a river flood zone, they could flood and should get a policy?
I mean, I think it's always a good conversation to have with people. Unfortunately, people take a lot of that thing, oh, it's never going to happen to me. We have a really difficult time getting people who aren't in the high risk flood zone or required by their lender to buy the flood insurance to actually take one out.
Yes.
But I mean, it's always a good conversation. And it's like I tell people, water has no boundaries. It doesn't matter what the map says, right? You could get those heavy rains. There could be something unusual that could happen. And so, it's that risk. It's much like earthquake. A lot of people like, should I take out earthquake insurance? And well, it's probably not going to happen to me. Maybe I will, maybe I won't. And that's what happens a lot with the flooding too.
So Gail, go on to Tristan, who's our floodplain manager. But in Norfolk, I tell people when they ask me if I should get flood insurance, I said, does it rain where you live? And that's sort of the answer. And in 2017, Hurricane Matthew hit Virginia Beach. And that was 5 to 6 miles in, to your point.
Wow.
And 70% of the homes that were severely damaged were not in the severe repetitive, the special flood hazard zone. So
And
the low, and that's the sister city to Norfolk. So that's in our region here. So we have a real reason. But I'll be quiet now. There's a bunch of folks on Zoom land who want to talk. I'll let.
Thank you, ma'am. Go ahead, Ms. Barnes.
Yes, I am Tristan Barnes, the floodplain administrator for Norfolk. And so in Norfolk, we do have a program for public information where we do a lot of engagement and outreach with the general public. We do have targeted areas, like our repetitive loss areas in the special flood hazard area that we do send mailings to. But we do basically try to, if it rains, it's going to flood, it could flood. So we try to target all different audiences of folks to encourage them to get flood insurance. I do want to say risk rating 2.0 has kind of thrown a wrench into things and, we have a lot of guesswork now because it's not as clear as far as what the benefits are. But we in the city definitely try to do a lot of, engagement with the community as a whole to inform them that even if you are outside of, your AE and your VE and even X shaded flood zones, that you should really try to purchase flood insurance because you never know. And like Ms. McClellan pointed out, Matthew, a lot of those claims were outside of the special flood hazard area. So we do try to, let people know that and really, really, really encourage people to, if they can afford it, to get flood insurance.
Yeah, I think that's fantastic. And I think one of the points to drive home too about the insurance is if they have a flood claim and they have insurance, they can just report the claim. But if they don't have insurance, they may not have any coverage because if the president doesn't declare it a disaster, right, they have to wait for a presidential disaster declaration for there to be any kind of money available on the federal side. And if they don't do that, then they basically have zero recourse for rebuilding or putting their lives back together.
Exactly.
Thank you, ma'am. We've got another question. Kim?
Hi there, guys. In my former life, as you all may know, I was in Virginia Beach with Matthew, and we had to the councilwoman's point, we had 2,500 plus homes that were in that were not in a flood zone that ended up with significant damage in Matthew. And somebody else had just mentioned too, the only reason those people got any relief whatsoever was because it was we did get a disaster declaration because
Yeah.
there were so many folks that did not have flood insurance. When I used to go out and do these presentations, and I know Norfolk and Virginia Beach and all, are still actively doing those. And I think I saw somebody on here from the HRPDC that does a lot of community engagement. But one of the things that we really tried to drive home was the average flood insurance claim. If you filed a claim, if you had insurance and filed a claim, was $30,000+ that you got reimbursed, and a federal reimbursement from a disaster declaration, those people were getting like $3,000. So in most cases, it wasn't even enough to cover even replacing the flooring. So that's kind of, a graphic that we would tend to put in these presentations. And then as these communities have become CRS communities, they have a required outreach component of that. So I know that Norfolk and Virginia Beach and the other communities around here will tend to do big pushes for flood insurance, for that purpose. But really just trying to drive home the public engagement with that, and stressing that even if they are in or not in a flood zone, it can rain anywhere, it can flood anywhere, and those floodwaters cannot read the map, and one claim, and you will be awfully glad that you do have that. But fantastic presentation. I know the insurance agents around this area, we did a lot of work when I was at the beach, trying to get the insurance agents to really, become advocates for their policyholders, because, we would have people that would get to the closing table and somebody's like, oh, you need flood insurance. And, the homeowner's blindsided. The agent a lot of times is blindsided. Matthew, unfortunately, gave this area a big lesson on that one. So I don't think it happens as much anymore as it did. But as memories fade from Matthew and homeowners start to turn over and have new owners, we may be seeing a resurgence of that. So great presentation, and thank you.
Yeah, thank you, Kim. I gotta say too, I understand that on some of the commercial people in our area, there was a time when they did get some assistance on disaster assistance, but it actually ended up being a federal loan at like a 1%, and they had to pay it back. So it's true. You might have a $30,000 loss, and they might write you a check for $3,000, and that's just not even enough to add anything. One thing I forgot to add on the private side, which I think is good to know when talking about these claims, is like a lot of the private flood carriers offer loss of use, which that isn't something you get under the federal flood policy. So if you have to go rent a hotel room because there's flooding or you're at risk of flooding, there's no coverage for that under the federal policy. But under the private policy, they do provide a little bit of coverage for loss of use, which is huge.
Gail, the city of Norfolk has plans to build a protecting wall around its downtown core, protecting parts of the city. How does the NFIP risk rating 2.0 absorb that in terms of the rates? I didn't see that on your list. And I guess the follow-on question would be, how do you not incentivize people behind that wall to drop their insurance?
Yeah, well, I think the thing is, first off, even after you build that wall, FEMA has to come in and redo your maps. And that sometimes can take a 3-year process to do, because you have to hit certain requirements, then you have to hold so many public meetings, and there's a lot that goes into that. Because even if you build the wall, if FEMA does not change the maps, the lenders are not going to let them cancel their flood insurance. And the thing about canceling your flood insurance, it's not an easy process. It's not like you can call me today and say, cancel my homeowner's insurance. I'd be like, okay, sign here. Or cancel my auto. And I'm like, okay, sign here. When you go to cancel a flood policy, we have to have proof that you sold the property. We need copies of your closing documents. or we need proof that it was removed from a flood zone. So there's a lot to being able to cancel a flood policy. It's very complicated. And I think under the risk rate 2.0, I think they might have put a few more of these together, but there's somewhere around 22 reasons under the federal flood policy why you can or can't cancel a flood policy.
So Gail, our regional organization, the Hampton Roads Planning District Commission, has actually put together a website called getfloodfluent.org.
Oh, nice.
And with the intention of trying to emphasize, oh, look, Ben already put in the notes in the chat, he put he's one of the masterminds behind it. Thank you, Ben. Also within the city of Norfolk, we have a tool which will really freak out all property owners that allows you to put your address in, and using photos from our assessor's office, it shows and you can design and designate what your first floor elevation is. It will show you what a flood will look like on your property at a certain level. So that's another, it's not widely used because we also don't want to freak people out.
Right.
Right.
So, but it's that balancing act, right?
Yes.
You want to encourage people to get flood insurance, but you also
Don't want to scare them and run them away. Right.
There used to be a time at which you could say, well, if you do these three things, get an elevation certificate, put in flood vents, lift your HVAC equipment, your flood insurance is going to go down by X. Risk rating 2.0, nobody knows what the hell's in the black box and can't figure it out. So do you see a point at which that will change? A method by which we can
Figure things out? I don't know. I mean, I used to be able to go to the flood manual and I could, look at rates, and sometimes I could even challenge underwriters that work for the flood carriers that figure the rates and be like, you didn't do this right. But with the new risk rate 2.0, you're right. It's kind of like a big black box of kind of guessing, and we just don't have those tools available to us to be able to figure those things out anymore.
Gail, this is Jim. Just to add on to the three things. We typically every year encourage folks to do an insurance audit. Okay? And it really sticks with me, the fact that you said some agents may just typically write down that you're in a slab on grade when in fact you might not be. What are three things that you would encourage folks to look for if they did start reviewing their insurance policy that you've seen really where errors typically occur and could benefit their insurance rate?
I think the biggest thing to look at is there's a section where it talks about building information, and that's where it talks about your year built. It used to be, things were rated based on pre-firm and post-firm, and there was a cutoff year for every county on that, but they should make sure the year built, the square foot, and then make sure now on every flood policy, it says what your replacement value of your house is. Make sure that's correct, because I did notice that on some of our policies, if we did not get back to them when they moved over to risk rate 2.0, meaning the rating carrier, and tell them what the value of a house was, they were just throwing $500,000 for every home in and issuing the policies. Well, the rates go up if there's a big difference between the coverage you carry, which again isn't fair because you can only carry $250, and your actual replacement value.
Excellent. Thank you.
And Gail, since we're in a room with a lot of folks an emergency management standpoint, this is all pre-disaster discussion. Can you talk about what happens when there is a flood event? I have a policy. What does it look like to actually file a claim? What are the things that we should be directing residents to think about beforehand and afterwards to most effectively file a claim and get the funding?
Yeah, I mean, I think that, the biggest part with any kind of disaster, whether your house is on fire or it's flooding, everybody runs out of the house, right? So you can't call an 800 number because the first thing they're going to do is ask you what's your policy number, right? So I think the biggest thing is making sure, you communicate with your insurance agent, because they usually have a smaller database and can look you up by name. and then they turn in the claim. When there's big disasters like that, FEMA hires independent claims adjusters. So then they have a little bit of different process for all of that, and who's going to handle things and how that kind of goes through. But I would say still the first thing to do is to let your insurance agent know. And also because sometimes your insurance agent, if something strange comes up, is there to help you give advice or help you get through the process, or just overall help with communication. Because another thing that we see too is like we might have policies we wrote 20 years ago, and they might have a claim, but the phone number we have on file was from 20 years ago, and then the claims adjuster can't contact them. So I think getting a hold of your agent and making sure all that information is right, like I have a claim, this is the number I should be reached at, is really important.
So it sounds like we should all take a picture or scan our claims and put it into our Google Drive so that we have
Yeah.
it if we're not.
Your policy deck pages, whether that be your flood or homeowners, always a great idea to have access to that.
Read it anyway.
Can you hear us? Can you hear us, Gail?
Yeah, I can hear you.
Okay, we lost some of the audio, but thankfully we have the text to read as well. So we lost you, but we still had you.
Gail, I got a question. I appreciate you addressing Jim's concern and question about the 30 days, because that's what we often tell people is to get you'll have 30 days to wait in order for the insurance.
Nope, I kind of lost you there. I'm not sure exactly. Can you hear me what your
Industry
question was?
standard. Can you hear us, Gail?
I didn't hear the question at all. I lost you completely.
Phone, okay?
Okay, I can hear you now.
Take your video off, might be.
Did you hear that, Gail?
No, I didn't.
Well, maybe if you take your
What do you want me to change?
Maybe could we turn our video off?
yes, ma'am, ours is off. If you want to turn your video off, we can try that. There we go. Let's see if this works. So the question was understanding that it could take up to 30 days for
Yeah, you cut out again, so I don't know if you can hear me.
what do you tell people when they're calling for? All right. Let me try and call in, okay?
Okay, let's see if that'll work. So I'm not really sure if you guys can hear me, even though I can't hear you. If so, I can address that 30-day wait again. Okay, so basically kind of like back to what the 30-day wait goes by is if they're taking out a loan, whether that's a new loan or refinance loan, the 30-day wait is waived. If they are buying it just voluntarily, they have a 30-day wait on the federal flood policy for coverage to go into force. And that goes from the day they pay it. Okay, I can hear you, yeah. So,
Okay,
So
Gail, you want
yeah, do you want me just to re-go over the 30-day wait?
Yes, please.
Okay, so if you're taking out a loan or refinancing, there is no 30-day wait. If you're voluntarily purchasing flood insurance, there's a 30-day wait from the day you pay it to the day it becomes effective. Unless it's private flood, and then each of them have their own requirements. The company I write with, one has no wait, one of them has 15 days.
You don't need to worry about the mic because you're going, please don't worry about the mic. It's picking it up.
Let's try that. Gail, can you hear us?
Yeah, I can hear you now.
Okay. Is there an echo on your end?
Just a little bit, but it doesn't affect anything.
Appreciate everybody's grace on this. We're trying to get this straight, but I think we've got it now. It may be a little low, but yes, I think we're good for right now.
Well, we made it through we made it almost to the very, very end without technical problems. So I'd say that's a win.
So how does one find private flood insurance carriers?
So I would assume a lot of your independent insurance agents would have access to private flood markets, but you know, your friend is also Google, right?
Yes.
It's like we all have a friend in Google.
You didn't ask me to ask this, but you also do policies for this area, right?
I currently don't, but I could. I mean, you know, it's a little hard for people in Virginia to know about me over in Oregon, right?
Right, until they read the minutes. I would like to talk with you offline at some point about the work you did in Portland and how we might be able to do some kind of mitigation activity here, doing something similar. One of my concerns is also, you know, the folks who can't afford flood insurance.
Yeah.
And I don't know if you have anything to say about that, but, you know, the folks who can't afford it or can't afford to file claims to be designated a repetitive loss or a severe repetitive loss, it almost sounds like, well, I was gonna say, it almost sounds like risk rating is helpful to them, but not really, because, you know, their
Well,
rates would be going, go ahead.
Yeah, the thing I did in Portland was before Risk Rate 2.0, where you could get credits for properly venting, elevating, you know, equipment, but that kind of went away. So I really think the focus just really has to be now, basically, like what do their policies look like? Like I did run some scenario. I did a couple of the rates. I went on Zillow, picked out a couple addresses. I know you'd sent me some, but those were severe repetitive loss ones. So I ran some quotes just to kind of get an idea, like, you know, what's it look like there. And like one I ran, I was surprised was in a high risk flood zone. It was only $561. So that was on the federal side.
Yeah,
And I think educating people that private flood is available, because a lot of people don't understand that it is available. They always thought forever, it's always been, you know, you could only get it on the federal market through FEMA, and there was no options. And I don't know how many people realize there are options now.
Jim, I have a question. You had mentioned earlier about renters, and getting the word out to get renters more involved with getting insurance. Now, would they qualify for these programs as well, or?
Yeah, so anybody can buy flood insurance.
Right,
Yeah.
right.
Yeah, so they would qualify for flood insurance either on the private or on the federal side.
So they could apply for the federal as well.
Yep.
Okay.
Your purchase, you don't apply.
Right, right, right. So, but it's getting the word out to the low income, the renters, the people with disabilities that don't have the funding to be able to afford the big premiums.
Right.
Exactly. So,
So what we're seeing is, you know, renters typically are older,
yes.
lower income people of color, and there's an equity issue. So right now in Virginia, you have to disclose if there's a property sale, but you don't have to disclose if you're a landlord to a renter.
Right.
And so that's the piece of legislation that I'm advocating for in the General Assembly, to try and right that wrong, if you will, because people just assume renter's insurance is, and it's like homeowner's insurance,
Right.
is gonna cover it.
It's not, and it's
So,
not.
Gail, would you recommend for renters that they just purchase a policy based on contents, or it depends on what the?
Yeah, so if you're renting, you can only purchase walls in, right? So you can only purchase contents. You know, the building owner has to insure the building for flood.
Right.
So basically what they are insuring is their furniture, you know, and their personal belongings.
Is that offered in the private industry as well, I'm assuming?
It is.
Do
And
you-
really,
do you-
I think the outreach should be really to the property managers, right? So I mean, if you have a complex that's got 24 units in it, you know, the rate's going to be the same for every unit if you have the coverage. So if you took an average and said, we're going to quote 50,000 in contents for this location, it would be the same flood premium, whether it's unit A, B, C, or D. So a property manager could always let people know, hey, this is available. This is what it would look like.
Are the contents only covered if the landlord or the owner of the property has flood insurance?
If the owner of the property has flood insurance, he would insure the building. And he can insure some contents, which would be, you know, things like stoves, refrigerators, things that a landlord would normally own.
But if you privately purchase your contents as a renter, will you be covered if the landlord does not take flood insurance on the property?
Yes. So both do not need to be insured. The building does not have to be insured with flood for you to have your contents insured.
That's a big.
Any other questions? Gail, again, fantastic presentation. This really opened
Thank
our
you.
eyes, and we're gonna have a lot to chew on after this. You may get some emails after this, and I'll certainly be giving you a call, but I mean, you did not disappoint. This is really fascinating. You really helped us get through a pretty labyrinth of a maze that we know as flood insurance. So thank you so much for your time, your graciousness, being willing to do this and spending time with us.
Yes, thank you. And you're more than welcome to share my email address with all those in attendance.
We will absolutely do that. Along with the slides, we will send your email address as well.
Perfect. You guys have a great afternoon.
You too. Thanks again.
Thank you.
Thanks. Bye.
So, other than the roundtable, one of the things I was kind of hoping to discuss briefly is the incident that's occurring in Maui. As we do, we typically assess incidents that are occurring, you know, throughout the nation and kind of bounce it off our plan. And the headlines that we saw all had to do with their alert notification system, that they had this expensive, you know, high value alert system that wasn't used. And so we're just kind of trying to dig in, well, why is that? And from what I understand, and you guys, I'm not speaking as an authority, so any feedback would be welcome. My understanding was that those were tsunami sirens, right? And you probably wouldn't want to turn on a tsunami siren, because the message is to go on higher ground, and that might not be where you want to go in a fire incident. So we're trying to learn more about this, but it got us to thinking, well, how are the alert notification systems done here behind the scenes? We know how they work, right? We know we can text in the message, we know it'll send. In reading the articles from the Washington Post, some messages still went out, right, through radio, television, and the like. So we're thinking, well, if it was a power outage that prevented the message from going out to, cell towers, then that would probably also affect the siren system. But still, here, what's required for electricity? Are cell towers dependent on electricity? And the answer is yes. And so we're interested in the redundancy of those cell towers. If the power goes down, if they have generator backup, for how long? So one of the benefits we got from doing that autopsy of Maui is the fact that we now have a meeting scheduled with the 3 big carriers, so we can have that very discussion. So we're not caught off guard if there's a power outage and after however many hours they're no longer there. Or how do we prioritize our resources to make sure that they get refueled for operations, then we won't be caught off guard like that. So again, we did the same thing with St. Palestine in Ohio, looking at that incident. We're looking at the Maui incident. We're always trying to look at opportunities to learn, and we learned something, but it's really interesting. And we need to do a better job about how wireless emergency alert and iPause is used. And we do a monthly test on that, depending on where you are in the community. I don't mean to put you on the spot, Daniel. You want to talk about that really quick? The monthly test for wireless emergency alert?
Most certainly. So throughout this year, we have conducted the wireless emergency test in Norfolk based upon our zip codes from the United States Service. So we've noticed regionally, no other locality is testing the service, and wireless emergency alert is a part of the FEMA iPause system. And if everyone is used to that Amber Alert, that ringtone, and it comes up on your phone, that's the exact same thing that we can do in the city because we are alerting authority. So nobody in the region had been testing this monthly to be able to establish that line of communication with our residents to understand that is how we're going to communicate with them during times of emergency. So throughout this year, we have picked a zone and we've broken up the city into 12 zones, and we have sent a wireless emergency alert, one to each zone a month, just so people can understand and get that ringtone to say that's how we will respond in an emergency to get them used to it. Now, the thing is that on your phone, you can either enable or disable the test alerts on your phone, which is fine. We understand that. But we do put it on social media to say that we are testing your zone. So at that moment, if you don't want all your test alerts on, we just ask that you turn it on for that month. So you can receive that test alert for that month, for that zone. And we tell you what day we're going to do it. We do it at 1 o'clock on the first Monday of the month. Barring any type of emergencies, then we'll push it off to the next day. Yes, ma'am.
Daniel, are these geofenced so I was just on vacation and I was getting emergency alerts from the same island. I'm assuming it.
Oh, for us?
No.
Okay.
There, but I'm just assuming if I'm out of town or if there's a visitor here.
Correct. Yes,
they'll
ma'am.
get it, just, it's geofenced.
Not if you're out of town. So what it is,
I'm saying if you have to
that's right,
your
in the
phone
city.
must be resident here.
So what we do as a learning authority, we are able to attach to all the cell towers within the city of Norfolk. So that is our authority. We don't have authority with any other city cell tower. So when we send out that alert, we can either send it out to the entire city, targeting all the cell towers, or we can pick and choose what areas of the city we want, and only those cell towers within that circumference that we've chosen will receive those alerts. Now, understanding that when we draw a circle, although there's 3 cell towers in there, you also have to put a circle around each cell tower. So there might be overages, and we are testing that. So a part of our monthly test is we're asking people to fill out a survey. If they were in Norfolk, what service carrier they have, and what zip code that they were in. So we can understand the overage of what our wireless emergency alerts are conducting. Right now, we are receiving feedback from Hampton, Newport News, Virginia Beach, Portsmouth, and Chesapeake. So they're receiving the alerts as well, not because they're in Norfolk, it's because the cell towers are overage in those cities. So it's a wide, vast area that we're able to communicate emergencies with. Now, that is just for our wireless emergency alerts, and we'll continue throughout this year and even into next year. I want to become repetitive in this so people understand we have this tool. But another tool that we have based upon our alerting authority is that we have the ability to be able to send a message through emergency alert systems on the television and radio as well. So if we have something significant where we're requesting people to evacuate an area, we're also going to be sending it not only wirelessly, but also to the cable carriers for your TV stations and also for a radio. So if you're driving around listening to your favorite radio station, you're going to get that alert with the same thing. If you're not getting it on your cell phone, you're going to get on the radio and television as well.
Yeah, not only geofence, thank you, Daniel,
Yes, sir.
but also a time that's associated with that incident. So if there was an active threat at City Hall, we would put a message to say, you know, stay away. And if you didn't get that message, if you're coming in from Hampton and you didn't get that message, as soon as you enter that area, it's going to ping your phone to tell you to turn around. And to your point, Ms. McClellan, this is, until wireless emergency alert, we never really had a way to communicate with visitors to the area. We could communicate with folks who subscribe to Norfolk Alert, which isn't many, but wireless emergency alert lets us ping folks that are within the radius of the cell towers. So our plan is, when there's an incident, for the life-saving messages, we're going to send a wireless emergency alert, and then all updates would be through Norfolk Alert, because there are FCC regulations on how we use it, but what messages and stuff like that. But that's our plan, is to use for the life safety messages and the Norfolk Alert update.
Yes, sir. And we've also had concerns from our community. Not everybody has a mobile device, and we understand that. So not only we're going to do the wireless emergency alert through the same system, which is Everbridge, we can also do a reverse 911. So it's taken all of those hardline telephone lines. A lot of us don't have them anymore, but a lot of people still do. So we can take those reverse 911 lines, put it into the same system, and send out the same auto alert, so people will get it on their mobile device if they have one, and their home phone if they have one as well. So we're just trying to make sure we get the message out as far as we can and as quickly as we can to help save lives. Sorry, Sarah.
No, that's good. Any questions about our alert notification system?
Is there a way that you can possibly, with the new satellite radio, I know from just dropping through the HRBC, if I'm on regular radio station, I'll get the alert.
Mhm.
So if I have my satellite radio,
Go ahead. I don't have an answer to that.
We're hoping, and this is, hopefully someone's here that can correct me if I'm wrong, but in the past, what we've heard that if you're going through a tunnel, they actually have their own antenna systems as well. So they can send that transmission to your vehicle while you're going through the tunnel. So if they receive it, they can send it. That's true. Right. You're exactly right there. So if you're on a satellite radio, then unfortunately, I don't think the FEMA IPAW system, that's why we also say, please sign up for Norfolk Alert. Because not only are we going to do the reverse 911, we're actually going to send the alert out to our subscribers. So if you subscribe for Norfolk Alert with the cell number, you're going to get it that way as well.
I mean, but again, thinking this through, because when we work with Cox Communications, it was easy. They could really detail where, and they could mess, whether you're using a streaming service or satellite service, there's still the wireless emergency alert. So you should still get it on your phone. That's not the end all be all, but it's one tool. And in that circumstance, then that would be the way that you would get notified.
Right.
All right, so one thing that we didn't do is introductions at the beginning. So I'm not gonna do it now. I would just ask that as we do the roundtable, if you don't mind introducing yourself and what department or agency you're with. And then if there's anything that you care to share for the good of the order, or any other topics that you would like presentations on, please let us know. I'm Jim Reddick. I'm the Director of Emergency Preparedness and Response here in Norfolk, and I appreciate you being here. in person and the folks online. I appreciate all your support and all your collaboration.
Oh, my name is Daniel Hudson, Deputy Emergency Management Coordinator. I am Jim's deputy there in the Emergency Preparedness Department. Happy to be here, thanks. We don't have anything. Next month's LEPC, I'll put this out there. We're having the Virginia Beach Emergency Manager come out and speak to us about the response regarding the tornado that occurred a couple months ago. So looking forward to that discussion.
Karen?
Hello, I'm Karen Lovely. I'm Jen's assistant.
Tony Castillo, the Deputy Director of the EOC. I have nothing, Jim.
Thank you, sir.
You're welcome.
Linda Johnson, Independent Center.
I'm Cheryl Simpson with the Independent Center. Can I make an announcement?
Absolutely.
Okay. I've been on the LEPC for a number of years, but I am retiring officially from the Independent Center.
That's not been approved.
End of the year.
That's not been approved. No, ma'am.
And Linda Johnson is my replacement. She is taking my role at the center. I'm in possibly, we're training right now. She's the Director of Employment Services, and she'll be doing the emergency management stuff in Norfolk and regional, whatever committees I've been on, she'll be going to. So I just wanted to introduce everybody to her so that you had a name to a face.
Thanks for doing that, and welcome, Linda.
Thank you.
Huge shoes to fill. Cheryl,
I know.
this isn't your last meeting, right? Or is it?
No, I think probably September will be my next month will be my last one. I'll actually physically come to.
Okay.
Then I'm going on leave for the remainder of the year to burn down my leave.
Sure. Okay. I'm glad we'll see you one more time. We'll have to have something.
Right.
Thanks, and thanks for all the years that you've been with us. Thanks for calling.
I'm Andrea McClellan. I serve on the Norfolk City Council. I'm your resident loudmouth today, so thank you for letting me come and ask a lot of questions.
Absolutely. I'm great.
I'm Paul Robinson. I'm the Executive Director of RISE. We're a nonprofit based in Norfolk, but we're regional. And we fund companies to come to this area to develop new technologies, products, and services around resilience, coastal flooding. Our focus this year was in flood insurance, and we're funding 4 companies that address the problems that Gail brought up. Today, we're funding one company that is building a risk rating 2.0 platform, so you can go on that website and do your own analysis for what your premium should be. And we're also funding one that is underwriting, doing the flood underwriting risk rating for all properties in the U.S., so as you can go look up your own property and assess that. So these are gaps of information that Gail identified, and we're trying to get them filled. So we work with the cities and the PDC to bring those here for our use.
I'm Michael Guest. I'm the safety specialist for the City of Norfolk Department of Utilities. And, yeah.
He still has the winning beard. I'm just saying. Thank you. Chief?
Good afternoon, Dan Jones. I'm with Recreation. I'm the Division Head of Aquatics and Beaches. Right now, this time of year, I'm the Chief Beach Lifeguard. So I'm on an ATV, riding up and down beaches, making rescues, and responding to a lot of medical events. All of our staff. It's been a real busy summer. Lots of water rescues. Last weekend, we had a lot of heat exposure incidents, of course. So glad to be here. Thank you.
Thank you. Eggleston, right?
Yeah, my name's Steve Lipo. I'm the new dedicated safety officer for Eggleston Services.
Cool.
And, Eggleston's been involved with this way before I came. We're gonna continue it. And I use what I learned here into my job, but also with the services we provide with our day plans and some of our resident services. Those people have caregivers and everything, but sometimes, like this insurance, I mean, I can at least head them in the right direction. Okay, my job is safety. I'm the dedicated safety officer. Before that, it was an additional duty from one of the executive officers. And you know how that goes when it's additional duty. It goes that way. Everybody goes this way. But
right.
Nothing works together. They don't talk. And that's what I'm working on now. Is we talk. We're together. And I'm out on the road a lot. I can't do a program and talk to people on the phone. That works. All this video works fine. You got to get out, smile, shake their hands, and so when they come see somebody walking, they know me. That's the safety guy. They don't go running away and hiding.
Right.
Stuff. So that's what we're
Appreciate it. Thank you for being here.
Thanks for having me.
Library's going okay?
Sean Bilby, Norfolk Public Library. Our contribution to the Norfolk Community Rate System is that we post the documents for the general public, so it's one requirement. And they're on our website as well as the catalog. So going to searching for key terms that come across them, either in print, if they're available, they can request to check it out, or links straight to the document itself. So yeah.
Thanks.
Afternoon,
Norfolk
everybody.
Health.
Yep.
And
Besides Johnson, Norfolk Health and Rehab, I'm the assistant administrator over there.
I'm Wayne Heslop, I'm the maintenance director at Norfolk Health and Rehab.
Awesome. Are you guys required to do exercises?
Yes.
Good. So we'll talk.
Our EPM for community service.
Okay.
For our state surveys and everything.
Okay, yeah, we'll talk. There's a lot of us that do, and we try to consolidate them as best possible. So, yeah, we'll work with you.
Thank you.
Good start. Thanks for coming.
Thank you for having us. Sylvia Stigler, I'm the Emergency Management and Forest Readiness Chief at Sector Virginia. Norfolk's part of our area of responsibility, and just reported in, so I'm trying to visit all the cities that are in our area of responsibility. Happy to be here and looking forward to working with everybody.
You can forget about the other localities. You're good here in Norfolk. Hopefully none of them heard that. Welcome. Thank you.
Hi there, good morning. I'm Mr. Mike Gabriel. I report to Mr. I am a designated emergency management specialist. I just moved here from the San Juan, Puerto Rico, area. My primary knowledge is mainly on oil spills, but I also branch out to any other emergency.
Okay. Welcome. I'd like to send you our revised oil spill plan, and chemical plan, so you might want to take a look at that if you don't mind. I didn't realize how intimately familiar you guys are with that in certain of the response efforts. And I was under the impression that EPA handled land and Coast Guard had the water, unless an agreement exists, which does. And so I learned a lot after the St. House came in.
Yeah, jurisdictionally, our area goes a little bit more inland, and because there's a line between the Coast Guard and EPA as far as like who takes what, but yeah, like intuitively you think that it's just the water, but it goes more inland.
Yeah.
Than you thought.
Oh, yeah. I mean, we were shocked. But we were thankful for the opportunity to review the plan. We weren't thankful for the folks in Ohio, but that we didn't let a disaster go to waste. We really tried to improve it, and we did. Thanks for what you guys did. Dave, Red Cross?
Yes, I'm with the American Red Cross as coastal region liaison.
Anything to report?
No.
Awesome. Well,
Weather, you need to stay hydrated. There's a lot of people that aren't doing well in this weather, so try and look after people.
well, the last thing about Red Cross, Chief, and making water rescues, just wanted to congratulate you on the reward that you got from the Red Cross. That was an excellent video, and it just shows that, the life-saving skills that you guys bring to the table. I was proud to say, yeah, he's on our LEPC. So it's an honor and a pleasure to work with you, and thanks for all you do and your staff in terms of saving lives on a daily basis.
Well, thank you.
You did a really great job with that.
Sure.
So,
You dropped your wallet.
Yep, I felt it. I didn't want to.
yeah, right. Anything else?
We'll go online as well. So if you'd like to introduce yourself online, I'll go down the list. And then also, if you have any comments, concerns, questions, that will be your opportunity to be able to ask that. So we'll first start off with Aaron Jacobs.
Yes, no concerns. It was definitely a great presentation. I learned a lot. And I'm the EM coordinator here at Sinclair Lee.
Thank you, Aaron. Appreciate you being here. Our risk manager, Kathy Chancellor.
Hi there. I'm not sure if Aaron was finished, but anyway, I'll jump right in there. But this was a great meeting, and I certainly appreciate the opportunity to hear from Gail. That I really liked all that information. It's good to see from another perspective how we are treating and preparing for flood exposures. As some of you may know, we try to work on our end to protect our buildings. Some of them, very few actually, have NFIP policies, while others are are currently being considered for that added layer of $500,000. So that's about it. I don't have anything else to report, but I certainly appreciate all of you. Thank you.
Thank you, Kathy. Appreciate you as well. Moving down, Ed Haran. Ed.
Yep, this is Ed Hanrahan, Virginia Natural Gas. I have a great meeting. Thanks for inviting me, and I have nothing to add. And I have to jump, though, so thank you.
Thank you, sir. Appreciate you being here. Jerry Reed. Jerry.
Hey, everybody. I hope you're doing well. ODU Emergency Management. I'm the planner. We currently have 2 tethered drones heading our way. We should get them next week. We're going to be trained up for all the football games and special events. And speaking of football, our first game is September 9th. Wish us well. Thank you for everything. Bye.
Hey, Jerry, we haven't received the tickets yet that you're going to send our way.
I will when we have a winning season. How about that?
Oh.
Come on, Art. Thank you, Jerry. Appreciate you. And Eve Zentrich.
Hello, everyone. I'm Eve Zentrich. I'm the emergency coordinator with the Norfolk Health Department. Great presentation today. Thank you, Jim, for bringing this topic to us. And I don't have anything to share with the group today.
Thanks, Eve. Thanks to everyone online.
I have a question for Eve. I'm Cheryl Simpson. I was at a physical therapy appointment this morning, and this lady who was sitting in the appointment waiting for us, and she had talked to 3 different people this morning that told her she should begin to mask back up because there is another strain of COVID. Can you elaborate on that?
Well, very broadly, COVID has not left us. It is still here, and it will be here for the foreseeable future. There is another strain that is circulating, and we are starting to see a slow rise in cases again. This is not anything new or unexpected. This has been the pattern with COVID since it first presented to us. Everybody should be prepared. It happens every year that when kids go back to school, we see a rise in respiratory illnesses. COVID is a respiratory illness, so we are predicting that COVID cases will increase. Come the end of August, beginning of September, when kids start back to school and start sharing cooties with one another and bring them home to their families. Right now is a very popular vacation time before school starts. So a lot of people are out there and about traveling, going all over the place, and they're starting to bring things home, which is one of the reasons we're starting to see that bit of a spike. So if somebody has or is at a particular risk for a respiratory illness, then their doctor may advise them to start masking up again in public spaces. But that is right now a conversation between an individual and a doctor based on their individual risk. So there is not any public health notice at this time for the general public to start masking up. Those are individual conversations between a person and their provider based on their health risks. And as always, in the plug, please get your boosters come the fall and flu shots.
Thank you. We appreciate you.
All right. Thanks, everyone. Don't mean to be the harbinger of doom.
Yeah. All right, guys. Thanks so much for your time. Like I said, we'll send out the minutes and the presentation. Thanks, everyone.
Thanks for having us.
Thank you, everybody. Have a great day online. Yes, sir. You just click the button, and then I'll.
That's on vacation.
I mean, just to like all the way.
He's on vacation.
No, sir.
Oh, gotcha. Been meaning to reach out. That was an excellent video on there. I was like,
Our communication department is just unbelievable.
oh, aren't they?
Yeah, but it started freezing everything.
So what we're gonna have to do is I'm
Like professionally made.
Yeah, yeah, oh, yeah. They are professional. They are, they come in,
Yeah.
it's shipping.
So as long as it works
Joy
out.
and
I'm
this-
just-
it's unbelievable what they can do. Yeah, they do that. I'm very proud and humbled how they did that.
It was great working with you.
Thanks.
All right, guys.
Hey, buddy. Hey, just inviting you down to our facility one day.
Okay.
No appointment needed.
Okay.
We're there from 8 in the morning till about 4 in the afternoon.
For sure, yeah, I'll
Sit
definitely.
down with you with my emergency preparedness manual,
Okay.
because, you know, I do have the elderly, the healthcare, the bedridden,
Oh, yeah.
plus the rehab.
Okay.
injury. So I always like to try to keep, I ain't worried about the state. I mean, I like to do it because that's my job. I want to make sure I'm doing things right.
I'd love to
The
be
right
there.
point of contact
Okay.
within the city, in case we have a failure and they have to evacuate, we got to notify you.
Right, right. Okay. Yeah, I'll
So,
definitely
yeah,
come
I'm
by.
right there at Topwater and Princess Anne, the
Okay.
four-story building.
Okay.
Right
Yep, know
across
exactly
from
where it is.
Lexington Park. So,
Okay.
been there for years.
Okay, I'll be out there.
All right,
Thanks
yeah,
for coming out.
yeah, stop by and see us.
Will do.
All right.
Thanks again.
Thank you.
Hey, Dave. Hi.
Find it hilarious that the emergency manager from Virginia